Well, good morning or good afternoon, everyone. Welcome to webinar number 66 in our ongoing series. This is a series we started a couple of years ago when COVID first hit, and we branched into some additional topics beyond just COVID. But this one is kind of related to that a little bit. In managing debt and collections is today's topic. I just want a couple of notes before we get going. One is you'll see a Q&A and a chat button at the bottom. So if you have a question for any of the panelists, please use the question and answer function. And the reason we ask you to do that is that's where we will go, and that's easy for us to see. But if you have other comments that you want to make in the chat, feel free to do that. And I always love to start with, we've got members who join us on these webinars from coast to coast. This may be your first webinar, this may be your 25th webinar. We have a lot of regulars as well, but maybe just put in the chat function what part of the country you're joining us from. For me, that never gets old. I love to see that, and see Newfoundland is first off. Sherry, welcome. Shannon from Calgary. Yeah, Katie. A lot of ladies in the house today. That's nice to see. So welcome to everyone, whether you're joining us from Newfoundland or British Columbia. We're happy to have you all join us, and use that chat function. You can see people are typing in now where they're from. Please feel free to use that chat function if you want to talk to each other or make a comment or whatever. That's why we leave that open as well. It's helpful. But if you have a specific question for that you'd like answered, put that in the Q&A. And as usual, we'll get to as many as we can. So let me introduce my co-host today, who's on and panelist today. So Corinne is in the house today, and many of you will know Corinne. For those of you who are new, Corinne is our Senior Vice President of National Affairs and Partnerships, and which is a fancy way of saying she does a lot of stuff. Should have introduced myself. For those of you who don't know me, I'm Laura Jones. I'm the Executive Vice President and Chief Strategic Officer, which is another fancy way of saying that I wear a lot of hats like you and do a lot of different jobs, kind of skate where I'm needed. Jocelyn is with us today. So Jocelyn is one of our advisors, and who takes phone calls and helps put together great information that business owners like you find helpful. And then Paul Murphy is our special guest, and he is a managing partner at Corporate Turnaround Group. And Paul, if you can just turn on your camera for a minute and we can test that, and there you go. Yeah, so Paul's with us, and Paul's also a member. Paul's company is a member of CFIB, so that's always feels like to support members. All right, as we get to the agenda, I'm going to turn it over to Corinne in just a minute. She's going to talk a little bit about what's going on with CRA as far as debt collections go, and looking at those CEBA loans. And then we're going to get to Paul, who's going to talk about debt restructuring. And then Jocelyn's going to give you a few tips from our advisory function on collecting receivables. And then any of us will take your questions along the way, or as you have them, or you can type them in and we'll get to questions at the end as well. So if we go to the next slide, we usually like to try and find a funny cartoon, find a little humor in whatever topic it is that we're amazingly, debt is not the easiest one to find a cartoon. We did find a couple of relevant quotes here, but no cartoon today. So sorry about that, but they just weren't that funny. So if any of you have a good cartoon, let us know. The next slide, before I turn things over to Corinne, just a quick overview of our small business recovery dashboard. We've changed this a little bit, but you will see that 78% of you are still reporting that you are carrying pandemic stress. 54%, more than half, still not back to normal revenues. Now that's not all pandemic related anymore, but that's labor shortages and supply chain challenges coming into play for sure. But the pandemic debt, 62% carrying pandemic debt. And I believe that average debt for a small business coming out of the pandemic is about 162,000, according to the surveys we do review our members. So we use this a lot with politicians as we're advocating on your behalf. But I thought it might be helpful for all of you to see where your fellow business owners are at with some of these indicators, particularly given that today's topic is around debt. So for the next slide, I'm going to ask Corinne to come up, and she's going to take over the topic on where I think the next one is CRA.
But I think you're going to do a poll first.
Oh, right. I'm like, why aren't they moving the slide? Right. Sorry. It's going to do a quick poll. So here's another thing we do. Thanks, Corinne. So just so that we get to know the audience and really help you get the most out of this webinar, just pick one in terms of how concerned you are about the debt that your business is carrying. And some of you may not be carrying debt. You might just be here for information or not all that concerned, but just wanting to learn. So there's that not very. Some of you may be really struggling and some may be in the middle. So we'll give a minute for that poll. Yeah, okay, so a lot of people in the middle, some people here for information, and some people really worried about more people in the middle, but more people very worried than not very. Great, I think that'll be helpful for Paul as he will be presenting in a moment, but I'm going to turn things now over to Corinne now that I've done the poll, and we will get on with this part of the webinar. Over to you, Corinne.
Great, thanks, Laura. So we wanted to talk, before we bring Paul on, we wanted to talk about CRA. We know that some of that debt that you may be carrying may be related to the CRA, and so they do kind of have their own special category when it comes to that kind of thing. And we know this because we do know and have heard from many that the CRA is sending out repayment notices to those who are found to be ineligible for various COVID-19 relief programs, like the Canada Emergency Wage Subsidy, the Canada Emergency Rent Subsidy, the Canada Emergency Response Benefit for individuals as well has been going on for quite a while. So we know that there are some challenges in that regard. We also know that the Canada Emergency Business Account loan, that $40,000 or $60,000 that was provided early on in the pandemic, of which about $20,000 can be forgiven if you pay it back by the end of 2023. So we still have about 18 months until that date. And that is for those who are considered to be in good standing with their financial institutions. Those that are considered not to be in good standing may actually start hearing from their banks sooner than that. And so that's another area that we're watching closely. It hasn't started yet as far as we know, though we do know the odd bank here and there has reached out to some business owners to say you're no longer in good standing, you need to repay your debt on the CFIB repayment. So these are some of the areas that will start with your bank, that particular one. But down the road, if that's not worked out with the bank, it may end up at CRA as well. So those are some of the things that are happening with CRA, and that's on top of just your normal audits that may be happening and monies that may be owed or delays in being able to pay what it is that you're supposed to pay on a regular basis, whether it's GST or source deductions. So we wanted to spend a little bit of time talking about CRA. We're going to go to the next slide, and I'm going to ask my colleague, Rachel Eng, to join us. Rachel is someone who does a lot of work with CRA. She's sort of our resident expert on dealing with CRA and probably touches base with them on a regular basis, more so than anybody else at CFIB. But I think it's important and most important to say, the first thing, if you do get contacted by CRA or you owe money to CRA, don't avoid them. You should not avoid CRA. Really, you should deal with them directly and try to figure out what's going on. So over to Rachel, I want to say, so what do you do if you can't pay your taxes that you owe to CRA today? What are your options? What do you suggest they do, Rachel?
Yeah, for sure. And not avoiding CRA is not just like not calling them back, but don't make them feel like you're avoiding them either, right? But yeah, for sure. First thing you want to do is figure out your financial situation. Put them all through, put them in the formats of income expenses or cash flows, accounts receivables, financial statements. If you need some help, you may want to consult an accountant or insolvency trustee if you're really far gone. It can be really confusing, so sometimes some added help is really great. And then determine how much you can pay, right? At the end of the day, CRA wants to know how you're going to pay this off. And so CRA has even created a payment arrangement calculator that's supposed to be helpful for individuals and businesses. So you can just tinker around with that. It's kind of like the other COVID program calculators. It doesn't hold any of your information. It's just you can kind of estimate what you want to provide to CRA. And then once you're at that stage when you have that understanding, definitely call them and keep them in the loop about your situation. If you say that there's been a flood, for example, and you've lost all your documents, that is something that CRA should be able to negotiate with you to say how long you can expect to pay back, whether you can pay in full or partially, what kind of arrangements you can make. And then once you make that arrangement and agree to it, stick to that payment schedule. And I can't emphasize this enough because we do get a lot of member inquiries where, they thought they could maybe play around with some of that money in between. And at the end of the day, CRA decided to take out the money for that debt. And then they ended up freezing the account all over again, just because the funds weren't there when CRA was scheduled to be taking it out. So can't emphasize that enough.
So would it be fair to say, Rachel, that CRA, while they may have a debt that you owe and they're expecting you to pay it back, that they're open to negotiating with you, not so much the amount of debt you're going to have to pay that back, but certainly the timeline of how you pay it back and over a period of time. It's not as strict, say, as a bank kind of thing in that regard. So it
Yeah.
really depends, I guess, on what your history is with CRA as well, right?
And we can get into that in the next slide a little bit more as well. But banks generally, and maybe Paul can speak to this a little bit later as well. But from what we understand, banks are generally they take legal action a little bit more intensely right away because that is their money. Whereas CRA, I think after COVID, they've felt a little bit more empathetic towards small businesses, and they don't want to be seen as the reason why there's a blemish on a business name, or that a business is going under, right?
Yeah.
So they're trying to stay understanding to situations.
And we'll go to the next slide, but while we're doing that, I wanted to just acknowledge Kevin sent a note through chat saying that he's an accountant. He's noticed a big increase in the CRA calling clients for past due payments and being really picky on personal returns. So we only kind of glossed over that in the last one. Obviously, if you're unincorporated, or obviously if you need to do the personal side of the equation. So this does apply to you as well. And he's asking, has CRA been tasked with trying to recover as much tax funds to pay for COVID payments? My response to that, Kevin, would be I don't necessarily know if there's a link there. However, what I will say is that there was a bit of they did sort of stop doing collections during COVID, and now they're catching up. So I think there's a bit of that happening where they didn't do collections for quite a chunk of time during COVID, and now they have a backlog. And so you're probably seeing a more aggressive tone, or what looks like a more aggressive stance on their part as they try to catch up on those collections now. Would that be fair, Rachel?
Yeah, I think there was definitely the first half of COVID where they stopped doing audits altogether, and then they started up with Sue's audits again. You should know that they've also started implementing what I'm going to call a pre-validation audit, which means that they're going to try calling before an application is actually approved. So they're likely reaching out to businesses and individuals a lot more.
More than they have in the last few years. So, okay, we're going to move quickly here, but what happens if you don't work with CRA, Rachel?
Yeah, so before taking legal action, they'll make 3 attempts, 3 verbal attempts, so by phone. And then they'll send you a written letter. And so that written letter is going to be a legal warning. And if you don't respond to this, or if you seem to be dodging them, they can start to take legal action, which can be in the form of garnishing your income, garnishing your bank account, seizing and selling your assets, just to collect anything that you owe. We have heard, businesses who had their clients receive letters from CRA collecting the money that is owed to them, and even sharing the amounts that they owe CRA, which understandably damages reputations a little bit. So, but keep in mind that is something they are allowed to do.
Yeah. And just a quick to you, Leslie, when you say you, do you mean personally or the business? It can be either. So yeah, it can be both personally or the business itself. Whoever owes the money to CRA, that's the bank account they will potentially go after. All right. We'll come back to Elizabeth questions in a second. I want to now turn it over to Paul Murphy, managing partner at the CTG. Thank you again for joining us, Paul. We're looking forward to what you have to tell our folks here today. So over to you.
Perfect. Thank you very much for having me today. I'm looking forward to going through the presentation. Yeah, we did a very similar presentation with CFIB's support group. They found the topics very, very useful and informative. So we then decided to do it to the wider audience of the CFIB members. So today, basically, we're going to go through the current business climate. We've heard some of the stats around the business side. I'll share some around the personal side on the next couple of slides. We'll look at the warning signs for a struggling business. We'll go through some high-level business restructuring options. Everything is very specific to the unique situation of a business, but we'll go through some of the options that are available, and then we'll talk about some of the resources that are also available. So if we could go to the next slide. So who is CTG? Basically, we're a consulting company that represents the interest of the business owners. We provide an unbiased assessment of a business situation and advise them on the most effective options to handle a financial crisis, and review all the potential liabilities that could fall onto directors and owners as part of the process. What we like to do is explain all the options based on the business's unique circumstances, and then look at the plan that's going to fit the business best. What we see is business owners are very, very committed and focused on the business, and often sort of having a third party able to sort of take a step back, remove some of the emotion from the decision making, really helps clear the path for the business owners to make some sound decisions. So we're basically here to provide Canadian entrepreneurs an unbiased assessment of a business situation. We do solely work for the business owners to lay out a plan, and then we will help the business owners implement the plan. We typically work with small business owners where revenue is less than 5 million. So just on to the next slide, please. So we saw some stats with regard to business. Just want to cover off a few stats, that are relevant to business owners, but also relevant to employees too, so you can sort of help understand how hard it can be for them out there. Right now, there's about 53% of Canadians living paycheck to paycheck. 25% says their debt is overwhelming, and 27% say they can barely afford to meet their needs, and 60% of people are not on track for retirement. Obviously the businesses are still struggling from the fallout from COVID, and so are the individuals. And we're seeing, the stress that individuals are bringing to the workplace for financial reasons, and how it's impacting the work that they're able to do. Certainly with the recent rise in interest rates and the cost of living, things are certainly getting harder, and the stress for business owners and their employees is also increasing. we sort of looked at some of the action CRA are taking from a business side. Personally, what we've also seen is CRA are now starting to really collect on the SERB overpayments, people who may have applied and they thought they were entitled to the benefits and actually weren't, and they're now asking for those to be repaid, which again is adding, you know, a lot of stress to individuals. So if we can go to the next slide. So some of the typical warning signs that we see are companies that start becoming delinquent on CRA payments. Often CRA payments are the first ones that do get missed because business owners sort of prioritize where the payments need to go. Often, you know, paying wages, key suppliers to get, you know, inventory in, those type of things are the ones that always get paid. CRA is unfortunately quite an easy one to fall behind on by prioritizing the other payments. There's missed lease payments, whether it's equipment or premises, threats of eviction, escalating accounts payable. And, you know, what we often see is a lot of business owners are using personal credit or applying and extending their personal credit and using that money to sustain the business. In many cases, they're not even able to take a salary out, but they're using their personal assets and their personal credit to keep the business afloat. Obviously, missing payments on any of the long-term bank debt is a key indicator. And a lot of the times applying for sort of what we call the lenders of last resort, which is sort of some of the merchant service lenders where they're advancing on the merchant account, and factoring companies can put the business in a great deal of stress. The payments are often really significant percent of the revenue that's being collected. Also, things like financial reporting not being current makes it really hard to manage the day-to-day business, and certainly, you know, almost impossible to plan for the future when the financial reporting isn't done. You know, when CRA returns haven't been done, it's hard to fully assess exactly what is owed to CRA. And falling behind on paying suppliers. Maybe the company's been put on sort of cash on delivery and those type of things. And yeah, and like I said earlier, CRA is one that does tend to get missed first. But also at the same time, CRA is one of the most powerful creditors, which can cause a lot of problems further down the line. So if we could just skip to the next slide. So over the next few slides, we'll talk about some of the restructuring options, and we'll sort of go through knowing when and if restructuring is needed, and also, you know, how to properly go through it. It can be a very complicated process depending on the situation. You know, some of the key indicators of a company and working through whether they actually need to go through restructuring is their revenues, really understanding the viability of the business, and even through a restructuring, whether it will be successful, or, you know, whether it's the business owner's desire just to actually exit the business. If we look at sort of the options to do that with the minimal personal impact. The type of debt the business has will be very key as to what debt restructuring options available, whether it's sort of tax debt, source deductions, secured loans, leases. They're all handled very differently. And the other key thing to try and understand is what's personally guaranteed, and what directors' liabilities potentially fall on the business owners when we're looking at the most suitable option for restructuring. So we'll take a look at those over the next couple of slides. Like I said earlier, every situation is very unique based on the short and long-term goals of the business. And sometimes, a combination of a number of restructuring options work well together. So if we just nip to the next slide. So the first one is really informal debt restructuring. This is a solution that basically requires negotiating directly with each creditor and supplier, and in some cases CRA, to try and find a payment arrangement that's going to work with the business's cash flow, get the creditors on side and the suppliers on side to support the business. Depending on the debt type, it can either be negotiating a repayment plan, or it can just be negotiating a one-time settlement of a delinquent debt. Might be a supplier debt and you no longer need the supplier, and it's a one-time settlement is agreed for a reduced amount just to close the account and everyone move on. Sometimes there's a modification of secured lending agreements that can be agreed to get the business back on track. And an understanding of the viability of the company and the strict structure of the debt is really crucial for formal and informal process to be effective. This is typically the first option we see sort of business owners go through and wondering, whether it's a viable option, is actually to do nothing. And unfortunately, we see it all too often where the business owners do just leave it, and unfortunately, if they're not proactive through the process, we often get the calls when the landlord's locking them out or the bailiffs knocking on the door, and the sooner a business owner can look and address the financial challenges, possibly identify some of the warning signs through the earlier slides, the more options that are available when a business owner is proactive, and they will have a lot more control over the outcome than leaving it too long when possibly legal action has taken place and the creditors have really sort of run out of patience because there hasn't been ongoing communication with them, and now they're looking at ways to basically limit their losses and protect themselves. So if we can jump on to the next slide. So formal restructuring is basically, it's an option that's available under the Bankruptcy and Insolvency Act. It allows the company to stay operational and agree new repayment terms based on the company's ability to pay. It's really a great option for businesses that are viable without the debt, or they're viable once the debt has been restructured into a payment plan that's affordable and fits with the company cash flow. Like I said, it does provide protection under the Bankruptcy Act, so there is a stay of proceedings in place against what certain creditors can do. Any formal restructuring that's filed under the Bankruptcy and Insolvency Act requires a licensed insolvency trustee. Trustee's role is basically to protect the rights of the creditors, but also ensure the rights of individuals and business owners aren't abused. The trustee doesn't specifically represent the business, but they act more as a referee and ensure everyone follows the rules. What we say is, as a business owner, if you don't really have a comprehensive understanding of the Bankruptcy Act, it's often advisable to seek advice from a trusted professional who can help take you through the process and act as the advocate for the business as they're going through the restructuring. Somebody that really understands the long-term goals of the business and the business owners. Could be your accountant or a lawyer or an independent consultant. So one of the questions that sort of were often asked is why creditors would agree to any type of restructuring plan, especially if it's going to result in them agreeing to take less than what is owed. So, even the major banks and the lenders, they recognize that a company going through restructuring is on the verge of bankruptcy or closing, and they want to work with the business owners with a new payment arrangement. Nobody wants to see the business close, and the creditors recognize that by working with the business through the restructuring, it's going to give them a better return, usually than a bankruptcy, or the company having to liquidate assets and ultimately end up closing. For the suppliers that are part of the restructuring, they also recognize that there's an opportunity for future business if the company stays in operation. So they're often willing to work with the company through the restructuring on any of the old liabilities that the company's been unable to pay. And again, they're aware that if the company does go through a bankruptcy or a closure, that the ability for future business from that company obviously is non-existent. And small and medium-sized businesses, they tend to do business with companies of similar sizes. So ultimately, the impact of a failure of one can increase the pressure on other businesses and local suppliers. The many are relying on the success of other businesses for the long-term potential to keep working with them. So again, the knock-on effect can be quite drastic. There's a lot of situations where we see a company is struggling, not necessarily because of their own inability to manage the finances themselves, but that one of the larger companies has been unable to pay them, and the knock-on effect has been significant. And the knock-on effect to the companies that they're working with is then significant as well. So next slide, please. So an orderly shutdown of the business, there are sometimes cases where a business owner simply sort of has had enough, the stress is too much, they understand that the business is no longer viable, and they just need a properly planned shutdown of the business. Often it'll help minimize the financial damage and the personal stress on the owner. Typically, this is used when a business doesn't need to formally or informally restructure the debt, and they really have no means to afford a repayment plan of any type in order to keep the business open. So if the business has been consistently losing money or being constantly subsidized by personal credit, business owners often see it as the time to walk away. Like I said on the earlier slides, in many cases, the business owners, aren't taking a salary out, and it's making their own personal financial situation worse and worse. So the things to look at sort of as they go through an orderly shutdown is whether the business has any assets and what the liabilities are. Sort of, is the business worth saving, or in some cases, is it even worth selling to a local competitor that may want the client list? All of those things would be looked at before the shutdown. Typically, it's a case where obviously the liabilities are significantly greater than the assets. And through this, it's how the assets are handled in this situation is very important, depending on the rights and the priorities of the creditors. Any preferential claims over the assets, etc., need to be understood. And in many cases, sort of if that is the situation, then a formal bankruptcy may be a better option, which we'll cover on the next slide. So the corporate bankruptcy is basically a formal legal process, again, done through a licensed insolvency trustee. And what it does is it basically provides the fair and orderly distribution of the company's assets amongst its creditors. A lot of business owners we see think their only option is to close the business through a corporate bankruptcy. Can be very expensive in trustee fees. So, understanding when it's needed and when it's not is important. And when everyone sort of goes through the incorporation, they do so because it does separate a legal entity between the business and personal. But in many cases, there is significant overlap through personal guarantees and director's liability for CRA debt. So it's really important to understand the implications of what those are and how it's going to affect the business owner. As part of a corporate formal bankruptcy, the assets of the business are sold by the trustee, and the trustee determines who gets paid in which priority, because certain classes of creditors do have preference over the assets, and the trustee will handle that and deal that. Typically, for an incorporated company to go through a formal bankruptcy, the cost is usually a minimum of around $15,000, and for some small businesses, it's just not feasible, or in some cases, not needed to go through that. And the company can just go through a carefully planned, orderly shutdown as long as it's done properly. So if we just go to the next slide. So on our website, we actually have a relatively new business assessment form. If you go to ctgi.ca, there's a button called Know Your Options, and it's basically a free online assessment for business owners. We created it with our lawyers at the start of COVID to really try and provide a resource to business owners that were struggling. What basically happened is, as you go through it, it'll ask you a lot of questions very specific to your business. And then at the end of it, it'll give you actually a situation summary report based on the answers that are provided. And it covers basically all the key financial and legal aspects of some of the challenges and questions the business may be facing. If we go to the next slide. So the business situation summary report that you will get as you go through it, it's absolutely free, and it's basically there to help business owners understand the options when they're facing financial challenges. Once you get the situation summary, it's entirely up to you what you do with it. It may just answer some of the basic questions you have, or it may be something that you work with your accountant or your lawyer on to figure out the next step. Obviously, at any time, we're always here to help answer questions and provide support to any of the small business owners that are facing difficulties. If we just head to the next slide. So one of the key things that we also look to help is we look to help support business owners through financial education and financial literacy programs for their employees. As we know, employees are the backbone of any business, and there is a real correlation that exists between stress and job performance. Many times, especially now, sort of the stress is financially related. And as sort of we say, number one cause of stress can be financial. And it's been really sort of highlighted as we've been through the pandemic. So through our sister company, 4 Pillars, they basically are a financial wellness company that provides support and training to individuals that are facing financial challenges. And we've been working with financial literacy programs through a lot of nonprofit organizations since 2001. We've got a lot of really great financial literacy tools that we can help create programs to support the business owners and in turn support their employees. So the last slide is basically just any questions. There's my contact details at the bottom there. If anyone would like to reach out and just have a chat about the situation their business in and look at some of the early options, you can absolutely email me at any time, and I'd be happy to help. And like I said, every situation is unique, so what the options are very specific to the needs of the business and the business owners. So thank you.
Thanks so much, Paul, for that great overview. I think you've given everyone a really good sense of the forest, and now we're getting some questions that are diving into a little bit next level down. I'm just going to make a comment for the attendees, and that we've had a request that the questions be anonymous, and I think that makes a lot of sense given the nature of what we're talking about today, and I apologize that we didn't think of that. So I'm going to keep the questions anonymous and then ask for, it looks like we've figured out how to do this, but if anyone behind the scenes wants to make a comment about how participants can pose their questions anonymously. I'm seeing many of them are anonymous, but please feel free to pop up and or put something in the chat on that for everyone. But I'll start, Paul, by asking, a couple people are asking about sort of the cost of this. And so one question is put in the following way: what if the business cannot afford to pay the insolvency trustee? Another asking about what it costs to work with CTG. And you may prefer to have them contact you, I don't know, but the affordability, obviously, if you're financially stressed, getting this kind of independent help is both attractive and also challenging because you're already worried that this is another bill to pay.
Yeah, 100%. And sort of as we looked at sort of the corporate bankruptcy side of it, sometimes just the cost of bankruptcy is actually too much for a business owner to go through. So often there are other options from that side of it to look at, sort of more through an orderly wind down of debt. Typically, sort of, from a corporate bankruptcy point of view, if the business does have, significant assets and the business is liquidating the assets, often the trustee fees, which are set by government tariff, are coming out of what the assets are being sold for before the funds are distributed to the creditors. So there's a tariff that they have that allows them to be paid out of the asset sale prior to the distribution of credit. So for CTG, we basically have a number of different options depending on what the company needs, and our first focus is what's the situation of the business, what's the cash flow of the business, and what's going to be the right thing for the business. There are many situations where the business owner is stressed and overwhelmed, and sometimes just a free consultation to go through some of the basics and what options that they have, what the creditors can do, what they can't do, is often sort of enough to remove some of the stress. It may be one specific creditor that they're having issues with, and just some support and guidance to get them through that part of the process. And they don't, formally need to engage CTG for the services. We're happy to help people through that side of it. If it is more of an in-depth process, then we'll clearly lay out what the payment arrangements are for our services, and we'll always work with the business owner, on how those can be paid based on the cash flow and the restrictions and challenges the business is facing. Ultimately, we're here to always help a business get in a better position, not put them in a worse position by asking for more money for something that when they're already struggling.
Right. I think that's very helpful. There's another question about, are your RRSPs at risk if your company goes bankrupt or in an orderly, or if they choose the orderly shutdown route, which I think is probably a question that many people might have.
Yeah, it's a great question for sure. So the RSPs would be a personal asset. So depending on the debt structure of the company and whether it was personally guaranteed or whether it's director's liability through CRA, will ultimately depend on the implications for the business owner. If none of the debt is personally guaranteed, if there's no director's liability and the business is going through an orderly shutdown, then the creditors are simply notified as part of the process that the business is no longer operating, and then really that debt dies with the business. It's only if it's personally guaranteed or director's liability that it would fall on the business owner. The business owner then, has the option to look at doing some type of personal restructuring where potentially the RRSPs are exempt under the Bankruptcy Act, depending on when contributions have been made to them. But usually any contributions made within the last 12 months wouldn't be exempt, but any contributions made sort of prior to the 12 months are actually exempt in the Bankruptcy Act for individuals. So if they're looking at that as an option to deal with the personal side, then the good thing is, you know, the Bankruptcy Act does provide exemptions for certain assets.
Yeah, okay, and so retirement savings that were done or RSP prior to
the 12 months, yeah.
A more immediate time period, 12 months.
Yeah.
That's okay, that's interesting. I didn't know that. And then another question, does an orderly shutdown always result in walking away with nothing as an owner? And I think this is kind of related to the last question you just answered. Well, part of it, you could keep some of your RSP, certainly, that was older than a year. But any other thoughts on that? Clearly, this is top of mind for people.
In some cases, sort of going through the orderly shutdown, it's the liquidation of assets, and ultimately it really depends what the assets are and what the debts are and how those are then dealt with. If the assets outweigh the liabilities, then the business owner, you know, obviously gets to keep the difference, but it may just be sort of giving them the formal or informal plan just to wind down the business and exit the business before the situation gets worse. So some of the business owners we help, you know, they have assets, they're greater than the liabilities, but they foresee the future where the business is going to face increased financial pressure, and that situation then may change, so they're looking to exit it while there is still some equity in the business.
Fantastic. Paul, I'm going to bring you back up in a minute. I'm going to go to Jocelyn, who's got just a couple of slides on collections. And then and any of you in our audience, if you have questions for Paul or Jocelyn or Corinne, please type them into the Q&A, and we will get to them shortly. But Jocelyn's going to go on to the, now you're trying to collect and what are some best practices there. So over to you, Jocelyn.
So obviously, we're talking about the payment of your business's debt, but also there's an element that we wanted to touch on, collecting some of the accounts receivable that's owed from you. And that really can help with cash flow, which in turn can help you pay some of the debt that you have. We have come up with a little bit of some tips for how to collect your accounts receivable. And this is something that Paul and I talked about offline with some of the other advisors. Did you guys actually know that 10% of all invoices are never paid, or they're paid so late that a business has to write them off? So it isn't untypical to have these collections that need to be collected. I'm not going to read all of these tips, but one of the things that I think is really important is to be really clear when you invoice someone what the repayment terms are. If that has a 30-day, turnaround, if there's fees, interest on those debts, that's important. And some of the other things, if you've got a good customer, maybe being a little bit flexible will keep them a good customer, but don't be afraid to cut those repeat offenders that are always kind of leaving you high and dry as well. One of the best tips I think that Paul and I talked about too is cultivating relationships, because if you're a small business and you're dealing with other small businesses, sometimes getting to know the people behind the scenes, if you have a relationship with that person who might be the one who pays the bill or write the check, sometimes that might even give you a little bit of a leg up. But what we really wanted to do today too is show you that there's actually some different things that you can do to collect your debt beyond these tips. So if we go to the next slide, here's some steps. Here's one of the steps that this is the way it could look if you wanted to go through the process. We talked about having a clear invoicing process, but one of the things that we created for this webinar, and we're going to encourage you to go to our member portal to download them, is a series of letters. If the first invoice doesn't work, you can always ask the customers in various ways to pay some of that debt back. So this collection of letters that we've put on the portal, which is brand new yesterday, is actually 4 letters. There's a one and done letter, which you can send once and say, please pay this bill. Then the other 3 is kind of a 3 strikes you're out. And it looks like the first letter is, hi, did you forget about us? Please pay your invoice. And the second one is a little bit more assertive. And then the final one would actually say, if we don't have a repayment by a certain date, we may be taking further legal action. I just kind of wanted to also touch a little bit on what legal action could be. There's a couple options. You can, of course, go to a lawyer, or you can look at a legal referral service. A legal referral service, if you're not familiar, it's actually an appointment that you can make with a lawyer for a small fee. Some of the different provinces have different fees, but $20 usually will get you 20 minutes, 30 minutes with a lawyer. And it's almost like a little bit of a legal estimate, in the sense that the lawyer will give you advice on what your chances of success are, what the costs of pursuing that legal options are, and what they would do for you if you were to hire them. Most provinces do have a legal referral service, with the exception of New Brunswick and Saskatchewan. So I'm sorry for New Brunswick and Saskatchewan. They do not offer a provincial legal referral service. Another option that you might want to consider is actually small claims court. And small claims court is actually a pretty good, inexpensive option, because you can do that without a lawyer. It's relatively inexpensive. I checked, each province has different fees and they have different amounts that you can file for, but typically it starts about $100 to file a claim. If you win the case in court, then the person who owes you money will be asked to pay that back through the legal process of a judgment. And each province, again, has their own small claims court criteria. The lowest small claims amounts are in Quebec and Manitoba, which is $15,000, which isn't that small. It's fairly large. The highest is in Alberta, which is $50,000, and everywhere, all the other provinces fall somewhere in the middle of that. A few people prior to the webinar asked some questions about collection agencies. And collection agencies could be an option. It could be a little bit costly, because depending on the collection agency, they might collect the money in a few ways. Some of them will hold back a percentage of the amount that they manage to collect on your behalf. And then some of them will buy your debts outright and at a discount, and then try to collect whatever they can from your customer. The only thing to keep in mind here is, outside of the cost, also keep in mind, make sure they're insured and licensed, of course, but find out what tactics they use to collect, because you may not want to associate or have your business associated with certain collection tactics. So I guess the big takeaway here is to download our letters and use those as a tool. If you have questions, or if you need support in setting up a collection policy for your business, our advisors are there to help with that. And that's all I really wanted to highlight today, and open up the discussion and see if there was any questions about this process as well.
Thanks, Jocelyn. And someone making a note that that resource was hard to download, so we'll just make sure that one of our team in the background is making sure that there's an attachment to that CFIB resource. And I'll pull you back up in a moment too. Just very quickly on the upcoming, we have a webinar on, we're going to get to questions in just a minute, but we've got a webinar on the economic outlook for Canadian small businesses with our chief economist. He's really good. And so if you're interested in the small business perspective on the economy and where things are headed and inflation and all those good things, and have questions on the big picture, that's a great one to register for. And we also have our Small Business Everyday contest is starting on June 27th, and we'll be sending out some information on that. And it's a great contest because basically your customers nominate you. You don't have to do anything. If you win, you get $1,000 and they get $1,000 and a gift box, which is put together with various cool things from businesses across Canada. So stay tuned and look out for that. And if you have any questions, let us know. But I want to get back to a few questions. So I'm going to get Paul up, Corinne, Jocelyn, and just take a few more questions here. And there were a couple that relate to CRA, so I'm going to package them up a little bit here. First of all, Milena was saying, I saw in the chat function, was giving me advice, I think, to deal with CRA in writing, which is something that we often say, because you want to have a record and not just say, well, I spoke to someone from CRA and they said XYZ. So dealing with CRA in writing is a good practice. And I know Corinne and Jocelyn both might have more to say about that, but here's the second question. Any thoughts on how willing CRA might be on negotiating repayment amounts for the CEBA loan or extending of the interest-free beyond December 2023? And Corinne, I know that's something we're actively lobbying on, so I wanted to put that out there, as well as dealing with CRA in writing.
All right, so I'll start with CRA in writing. Always a good idea. And in fact, if you do it through my business account, my BA, if you haven't had one set up already, you should. And if you do, that's where you should be interacting with CRA in writing, because if you go into there, you have an opportunity, there's a portal in there where you can ask CRA questions. They'll respond to you within, I think, 10 business days. And whatever they respond to you must be respected, no matter whether or not it's correct. So that's your safest way of getting a response back from CRA that they have to respect. That's the only avenue that you're allowed to do that. So I can't reemphasize that enough, to use my business account in order to do that communications with CRA if you're looking to get things in writing. Secondly, on the CEBA loan. So as of right now, they did extend it from payback from end of 2022 to the end of 2023. That hasn't changed. There's still an expectation that if you got a CEBA loan, you are going to pay it back by the end of next year. And if you don't, you lose the amount forgivable and you start having to pay interest. So that's an important date. We are trying to do is push back that date further, one. Two, we're trying to get government to understand the amount of debt that exists out there and find ways to either expand the CEBA loan further, or the forgivable portion, I should say, of the CEBA loan, so you don't have to pay as much of it back. Look at other types of lending vehicles governments may have to sort of reduce either the interest or have more forgivable associated with it. Have more leniency about what the payback is going to look like for a lot of businesses that are still struggling. So there's a lot of things we're looking at right now to try to push CRA to be a lot more responsive to the realities that exist right now for many small companies. So we're going to continue to do that. We do have a petition on this as well, so we encourage you to fill out that petition. It's on our website as well. So if you just go there and look at the COVID petition, you'll see it's very much more focused on debt and helping with the debt now.
Yeah, and I would just add to that, what we're starting to see is, I mean, there's a bit of unknown on how negotiable they'll be on the repayment terms, but we're seeing a few of the business owners right now sort of scrambling to try and get the $40,000 to pay the CEBA loan off, so they benefit from the reduction. Now, what some are doing are using personal credit to come up with the $40,000, so it reduces the CEBA loan, but the CEBA loan is actually not personally guaranteed. So what they're actually doing is replacing business debt that isn't personally guaranteed with personal debt that then is potentially putting them personally into a difficult financial situation to try and save the $20,000 for a business that is already struggling. So prior to doing that, if your business is struggling or on the verge of closing, it's better to have sort of a discussion and really understand what those implications are, because if it's not personally guaranteed and the business does close, then there wouldn't have been the requirement to use the personal funds to pay it down.
That's a great insight, Paul. Another one, this one might be for you, Paul. Is there a time limit on collecting from a debt owed to you?
There's certainly statute of limitations that apply to creditors collecting on personal debt. I'm not sure if sort of the question refers to a business owner trying to collect from another business owner. But I mean, typically the longer it goes on, the harder it is to collect, and the greater the financial challenges will be. You know, we tend to sort of more deal with the business owners that are on the receiving end of the collection notices versus the other way around. But, you know, I would say in that situation, anytime you can try and, you know, maintain a healthy relationship with the business, even if it's just starting to take some small payments and keeping the business engaged and keeping a healthy relationship. Obviously, sort of, you know, the other option is, as discussed, is look at, you know, what the options are through a small claims process that then may help sort of, you know, protect the business collecting and sort of bump themselves up the priority, because the chances are, if as a business owner, if you're not getting paid, there's probably a handful of others out there that aren't also getting paid, and you know how quickly you react will also depend on you know how you prioritize yourself to get paid from that business. Yeah,
and Paul, I think this is a follow-up from the question you just answered on the CEBA loan, but if someone closes their business, then they're not personally on the hook for the loan. That's the question, and that was upvoted, so I know at least 2 people have that question.
Yeah, that's right. Yeah, I mean, ultimately, sort of depending on what you sign for the CEBA loan, I would certainly like to review it before giving, you know, a definitive answer. But typically, everything we've seen so far with what people have signed, there isn't any personal guarantees associated with the CEBA loan. Now, the thing to be careful of is if you're a partnership or a sole proprietorship versus an incorporated company, and you've taken that, that's very different because you're signing that as an individual versus signing it on behalf of the incorporated company.
That's good additional information. Thank you. Okay, well, we are now at time. It's always a sad moment when we get to this place in the webinar. There was another good comment about a loan program that wasn't useful because you can't use it to pay off debt. But Corinne, I feel like you will take that and put that into your lobbying arsenal. And so I'm just going to wrap up by asking Corinne, Paul, last thoughts. Jocelyn, if you want to pop on, last thoughts, and then we'll wrap up. Corinne, I'm going to go to you first.
Sure. Thanks again for joining us today. We hope that this information was helpful. I know this is a pretty stressful time. It continues to be a stressful time, especially if you're dealing with debt. Hopefully, some of this brings you a little bit of information that can help you figure out what your next steps might be. Of course, I'm sure Jocelyn will say this already, but our advisors are there to help. And so we encourage you to give us a call and we'll do whatever we can. So thank you for joining us.
And Paul, you're getting quite a few thank yous on the chat. So I'll maybe go to Jocelyn next, and then I'll go to you, Paul.
Also wanted to thank Paul for first of all bringing this information to the advisors and helping us with our knowledge base, and encourage everyone who has any questions to please get in touch with us. And thank you once again for joining us in the webinar, and we look forward to seeing you in the next one.
Great. And I should have mentioned right off the top, because I see a question about a recording. You will get a recording and you will get the webinar deck for everyone who participated in the webinar. So don't worry, that's coming. Paul, I'll come to you now, and you're getting a lot of thank yous, and I'm going to join in and say thank you very much for making, you know, it's tough. Sometimes the hardest thing to do is make complicated topics easy and digestible. And I think you gave everyone a really good sense of the forest here, and also some next steps. And that free consultation is a great next step for people who need that. So thank you, and over to you for some last comments.
Yeah, thank you very much, and thanks for having me. And I think, you know, the key to remember is the stress is often sort of, it seems a lot worse with the unknown. The process is complex, and the options, you know, can be can be vast. The great thing is, Canada has some amazing programs to help individuals and businesses that are struggling with debt, and they're all there, when utilized properly, to resolve a problem, not create, further problems. So, rest assured, there are always situations, and sometimes, just the first call is the hardest to make, but many times, just once some of the uncertainties removed, it does clear the path for some rational business thinking as to what needs to be done to get the business out of a very difficult situation.
Yeah, well, thanks so much. And I think that's true. It's the uncertainty and the unknown that's so scary. And we've just been through 2 years, more than 2 years, where our batteries are really low on dealing with all of the uncertainty. So, having this on top of it, and it's a great next step to be able to call for, to get a little bit more information and clarity, and to know that the meter doesn't start running as soon as you pick up the phone, that there's a little bit of a free consult before that, before you make a decision. So I think that's hopefully that provides some comfort. I go back to just my last comment for everyone is you're not alone. 62% of our members are telling us they're carrying pandemic debt, and the average varies a lot by sector actually, but it's well over $100,000, and I think the average is about 162 according to our last poll. So we're on that on the advocacy side, and hopefully we'll also have some, we'll hopefully get some wins. That doesn't happen overnight, and there's no guarantee there either, but we're trying to make sure we do everything we can to get you the resources you need to continue to managing this kind of cleanup phase of the pandemic. So with that, we'll thank everyone and hope to see you. I hope you join our chief economist. He's great. I think I'll be on that one, and Corinne may be on vacation, but then Corinne's got another one in the works that we'll tell you about soon. And we love doing these, so we'll look forward to seeing all of you again very soon, I hope. And with that, we'll end the webinar.